everyone, this is a trader investor. In today's video we're going to prepare for this coming week. Last week we had a short week, but this week is a full week. And how is the market doing? Where are we? Are we heading up? Are we heading down? That's what we want to take a look at. And right now it's Sunday evening. The futures have already opened, but as you can see, they're barely moving. This is no movement at all. So there's really nothing to kind of think about the futures to prepare. So we just focus on what is the chart telling us based on last week's close. That's what we're going to focus on, because the futures are not telling us anything. And even if they were telling us something, I usually look at the futures as just a gauge for me on how to think about the morning. But it's really when the cash market opens, right? When equity market opens, that's when really things start moving. Friday we had a non-farm payroll report, and even though it was weak, it really didn't do a significant damage to the market. And what I mean by significant damage is, if you look at where we are, we have a bottom. Right now the 380 area is the bottom. That's what we know. The structure is broken, right? We're making higher lows, higher highs, higher lows, higher highs. That's what we're making. So that's the downward structure is broken. Where that structure could end, as I have mentioned a couple of times, we have a supply zone up here. That's really my target area. This is where I'm going to focus for any potential area for price to reverse back the downside. And even if we look at the daily chart, is really that clear indication that we see on the hourly chart is the same, right? Same narrative, nothing really changes. And when we look at the weekly, we have this weekly downtrend here, this weekly fib that I have drawn, and we have closed above the 38.2%. Usually when we close above there, there's a tendency to go to the 61.8, which also lines up with that supply zone that I have drawn, right? And so that really lines up with this supply zone. And here is that 61.8 on the weekly, the downward retracement, this rally that we see. So lots of confluence here. That's what we're looking for. And even as a target, right, this current Fibonacci target is also this halfway through it. So many confluences. So we're prepared, right? We're prepared to take action accordingly. That's really what this is all about. So as I look at my Fibonacci levels, I have drawn, for those of you who are new, I usually like to draw them, from the bottom. I go to the next swing, and if that retracement has gone past the 38.2 on a close basis, not a wick touch, but if just the wicks are touching, that's not enough. If there's a close outside of that 38.2% retracement, then what I will do is I will draw a new one from this low to this high. And so this, I will consider this fib retracement no longer valid for my style of trading, for me to take action. So when we're looking at these highs, we have tested the 38.2 again. We did not close below it, so this was going to stay. If we keep making higher highs, I'm just going to keep moving that high side until we get a retracement inside the 38.2%. So earlier I mentioned that the Friday NFP report did not do a whole lot of damage. Friday was an inside day, right? If you look at the daily bar, Friday was an inside day. It was contained within the high and low of the previous day. And you can see that clearly. Here's the low of Thursday, here's the high of Thursday, and we stayed within those boundaries. So again, with futures, dancing around that zero line, pretty much up to down to is just dancing around that zero line. We have yet to see what is going to happen. what is going to happen. This 23.6% is the monthly retracement level. So from this COVID low to the last high, which is an all-time high, that retracement has tested the 38.2 on a monthly basis. And now we're, seeing that the 23.6 is acting as resistance. Because even the previous months, when we tested it, we never came back above it, right? When we never came back above the 23.6 after we tested the 38.2. So we are an inside month so far, but it's only the beginning of the month. We've only had 3 trading days in this month. So on a monthly basis, I'm not too focused on this monthly bar being an inside bar. It could push on either side at any moment. But what I want to focus on is, where are we? We're above the 38.2. We did not close it on the other side of it. So we have a good chance of breaking this, especially if we are able to break the May highs. If we're able to break the May highs, we could push for another all-time high. But this supply zone here, which is barely visible on the monthly, more visible on the weekly, and then definitely visible on the hourly right here. This area here, which is hard to see here, and here. I have another one, but that one is actually here, which is this high from last month. That area there is very visible here. That's the area we want to focus on. Price could reverse from here. It could form double highs and reverse here. So we want to be careful. We want to monitor that. And so when you look at the hourly, then where are we going to push? If we push above the 23.6, we're going to go high to test those levels. So that's what we're looking at. So let's just do a real quick, the Qs and the IWM. The story is the same, right? We had an inside day in the Qs. We had an inside day in IWM. So that story is not changing. We're pushing higher, right? We have broken the downward structure. Higher lows, higher highs. Higher lows, higher highs. That's the structure we're seeing in tech. That's the structure we're seeing in IWM. Higher low, higher high. That's the structure we're seeing. So nothing is changing. They're all the same. And the point that we're going to focus on, what area we want to break, is the last month's high. That's really what we want to look at, right? Last month's high. Same with the Qs, last month's high. Because the reason why I want to focus that last month's high also happened to coincide with the supply zone, right? It coincides with the supply zone. It coincides with retracement levels. If we look at the weekly retracement, that 50%, if we can close below that 50%, if we've closed above the 23.6, we have not closed above the 38.2. In technology, I'm not yet bullish. I want to see this close above the 38.2 so I can at least target the 61.8. That's what I would like to do. And when we come to the monthly or to the daily, as you can see, that 61.8 is above this supply zone. So we have quite some distance. So that's why I'm a little bit more cautious in the Qs. Because if for me to target the 61.8 from the 38.2, if we close above, we have this headwind. I want to be very, very careful with this headwind. It's a supply zone, it's last month's high, and it's a triple top area, right? We have a triple top already, but could we have another area where it bounces to the downside, or could it continue? Yet to be seen. There's a lot of downward pressure in the market right now. A lot of geopolitical reasons to keep pushing the market to the downside. IWM, as you can see, the 38.2, let's see, maybe I need to redraw my IWM weekly. Where is my IWM? So if, as you can see, we have closed above, we barely went above 38.2. Therefore, you know, I have not seen any close above 38.2. That's why this drawing is not changed. So for IWM, not only do we need to close above last month's high, which is a, now we can see it clearly on the hourly, which is a supply zone. Not only we need to close above there, we need to close above the 38.2 for me to believe that IWM bullish trend is returning, because we still have a lot of headwind here. And as a retracement, when I'm going against the trend, I want to go from 38.2 to 61.8, at least initially, to see if the 78.6 breaks. When 78.6 breaks, we've resumed that direction. Same thing to the downside. If 78.6 breaks, we're going to that downward side. So right now, IWM is really, really weak. And when IWM is weak, I'm more cautious, because IWM, they lead us up and they lead us down. And right now they have been very good at leading us down, but they haven't been good at leading us up, which means if they're not able to lead us up, the market is still uncertain. The market is still not so sure. If you know, US, you know, small caps, you know, this Russell 2000 companies, if they're not able to get going, then I'm not very confident. Yes, I will play to the upside as much as the market gives us. When I look at the SPYs being above the 38.2 on the weekly, I still have room, right? From where it is today, 412 to about 430 area, that's quite some distance. But in IWM, I need to go from 198 from 198 to 216, but we're very far away from 198. Very, very far away from 198. We have quite a few areas that I'm concerned with, right? Very few areas that I am concerned with up here. So this is how I'm looking at the market. This is how I'm preparing. And now let's see how they react in the morning when the, you know, equity markets open. Right now, the futures are just flat, waiting for something to happen. All right, everyone, take care for now, and I will see you in the next video.